Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is going to be some interesting stuff. That's all I got to say. We're going to trade the 920 scalping strategy here. We've got a live trade going right now, but it's all about the election, guys. I'm not going to sit around and pretend that it's not all about politics. It's all about the election. I've been waiting for this week for a long time. You've got the election tomorrow. We've got FOMC live on Thursday. We've got the BOE. We're going to have all these things live for you. Keep a close eye on your stream schedule here if you're in the trading room, because we're going to be going live as we need to go live, especially tomorrow. I can definitely see a couple of different times during that trading session when we may be popping in and just sort of giving you an update on the election. It's by far the biggest market driver out there. Right now, it is, I would say the tension's palpable here in the United States. There's a lot of stuff going on. There's a lot of moving parts. And right now our markets are very tepid, very timid. We don't see a tremendous amount of action right now, but we do see a little bit of what I would call angst. And it's very important that we understand that these markets can really move. I'm going to show you exactly what's been done with the margins. I've been talking to my broker. We've been looking at the news. We've been doing everything we possibly can this morning to really get you up to date on what I view as being probably one of the biggest events that I've seen in just a long, long time. So it's good to see everybody back in the room. Wizard Alvin, all right, Wizard, good to see you, Wizard. Dibble, always a pleasure. Dibble, Mark, Corp, Evelina, guys. It's I'm not going to overstate exactly how important of a market driver tomorrow is. It's a huge one. We could sit around and talk about ISM, PMIs, and bond yields and all that stuff, but what we really are talking about is what is going to be the path forward. And how exactly is that going to work in the United States, especially if some of these outlying events come to fruition? I'm going to go over a few of them. I hope YouTube doesn't take us down today because I think it's very important that we talk about the odds of this election and the odds of this election being conducted in an efficient manner. I see stories right now that have my ears perked up, and I don't know that we're going to have any clue on who the next president of the United States is anytime soon. And I'm going to back that up with some there's a couple of big shows on the receipts. They bring receipts. We're going to bring some receipts today, and I'm going to show you exactly what I'm talking about. And I want everybody out there to be very careful this week. Remember, everything you lose, you have to gain back. Fortunes are going to change hands this week. Millions and millions of dollars. People are going to either make fortunes or they're going to lose fortunes. I don't want anybody to be swimming in that end of the pool. I want everybody to have a nice week, build up, build a little bit of equity, make a little bit of money. But remember that this is going to be a challenging time to trade. Election chaos potentially. Then what do you got? You got the Fed getting involved after an absolute dreadful NFP number. This is going to be some good stuff. And I was telling Connor, we had a meeting earlier today, and I said, Connor, what do you think? And he sort of went through some of the things that he was looking at. I got a couple of things I'm looking at. I'm going to be honest with you. I put my wallet away this week. I'm not taking big risks this week. I'm not interested. So let's see Austin. Good to see you, Austin. Welcome. All right, guys. Brent, good to see you, Brent. All right, guys. This is the 920 EMA strategy. I want to get this going because this trade's actually off and rolling. We're using RSI as confirmation. And the reason why we're doing that is because if you're going to use a crossover strategy, or if you're going to use an EMA strategy, it's important to understand that it is a lagging indicator. And what that means is typically you're going to need something that's going to help you get in the market at the right time. And we're relying on RSI to do that right now. So you can see RSI down in here. You'll notice that that's in oversold territory. So we're looking to buy the market. Okay, so we're down beneath that 30, and this is a 5-minute chart. We're scalping here. We're not taking positions necessarily, but we're using short time frames. 5-minute chart. There was our signal essentially to buy the market. Now, if we do get that RSI in oversold territory, what do we have to have on, say, a 920 EMA strategy, crossover strategy? The 9's got to cross the 20. All right, the 9's got to cross the 20. It's always the fast EMA crosses the slow EMA. And in this instance, right there was our crossover. We bought the market. We sent them long. Let's go ahead and see how this trade pans out. Now, there's a couple of ways that you can execute a trade like this. The first thing you can do, and the one that I really favor, is to depend on market structure to give us the answers. We don't necessarily have to know, where the market's going or how high it's going or how low it's going, but we do have to know where we have to get out. Now, there's a couple of ways to do this. The first way that you can do this is you just go beneath that previous swing low, swing higher, swing low. I'm a big fan of that. It does give you a lot of room to work. So in this respect, are you in fact a true scalper? Probably not tick scalping so much, but you're definitely looking to get maybe just a quick turnaround here using a reasonable stop loss. Now, if your stop loss is down here, that's fine. Okay, it's a pretty big trade. We're down there at about 56.93, somewhere in there. Thank you. Got some private messages flowing in. I sure appreciate it. I will answer those right after the live stream. But down in here, if that's your stop loss, great. Just remember, you got to get paid off at least a 1-to-1. And if you want to go bigger than that, you certainly could do that as well. But something up in here, you're probably going to be looking for the top of market structure up in here in this 5-minute order block. So if you're a smart money concept trader, and there's a lot of you in here, I hear a lot about smart money concepts. People absolutely love them. That order block right up in there, that would be what we call a supply zone. That's where the resistance really was, and that's where we sold the market off big. There's our move. Now we're sort of back. We're looking to get long and maybe get paid off up there at top of market structure. Now, is that in fact a scalp? No, it's not really a scalp. It's not the way that I scalp. But is that sort of an intraday trade? 100%. 5-minute chart, we're looking to get in. We're looking to get good trade location. I think our trade location right here is not bad. I wouldn't sit around and argue with it saying, well, you just bought the S&P. Well, we didn't buy it near the highs. We sort of bought it in the middle of what looks to be a range-bound market. It would not shock me if we rotated up and got paid here. We just got to wait and see exactly what happens. So there was our crossover. That's how I would execute the trade. Now, I've got a lot of you that have weighed in, and I've got a lot of messages. I've answered hundreds of messages on the 9 EMA strategy and the 920 and all that jazz. Okay. You can also manage this trade in a couple of different ways. Number one, you could do it the way that we did it. Just depend on market structure. We'll put our stop losses there and just let them roll. We can do that. You could also actually use the moving averages themselves. So like if you crossed over right there, that's your buy signal. Okay, we bought. Did we get great? We weren't really right on this, but we're close enough. So we're long. We could get out the next time it crosses over. So the idea wouldn't really be, according to market structure, it would be like, okay, if we cross over right now, then we would just exit the trade. Now, is that a good way to trade? I don't know. I think that there's a lot to be said for it. What I would definitely recommend, though, to each and every one of you that are trying to get a crossover strategy going, you're trying to get a methodology going, a way to trade the markets in a structured fashion, I would recommend that no matter what you do it the same every time. So if you're going to do this crossover, it looks like we're going to cross over. You can get out of the market. If you want to use the static risk versus rewards and just sort of stick with our swing low, swing high market structure methodology, you can do that as well. What I recommend is be consistent. Don't manage these things different every single time. Don't do it. If you do that, what happens is you get lost. And if you get lost, your statistics don't mean anything. Your win-loss record doesn't mean anything with respect to profitability. You've got to execute these trades the same way every time. So pick a way that you want to do it. Do a little back testing. Dial in your leverage, 1 to 3% of your account. Remember, these are demo dollars, 1 to 3% of your account on any given trade, and then just let it go and see what happens. Right here, I'm going to let this thing run. I think that we're in a decent position, even though we are getting hit a little bit right here. Am I worried about the bottom of this market falling out? Well, if it does, that's life. Then we just stop ourselves out right under there, right under that 56, right underneath 5,700. So I'm not really too upset about this right now. I don't like it. It's not performing very well at all. But if you're going to trade a system, you've got to have structure. You've got to know where your stops are, where your entry is, where your profit targets are, and then you have to be consistent when you execute. So right now, we're going to dance with the one that brought us. Looks like we're taking this one on the chin. That's life. That's trading. As long as your risk is clearly defined and manageable, you can afford to soak losses. Now, I don't like losing. Right now, that's tearing me apart, being down $284 on a trade that may or may not work out for us. But according to our system and our strategy, we're still alive and we're still ready to roll. So we're going to let that thing go. I'm going to go ahead and put that one on simmer. A watch pot never boils. That's the old statement. I remember my grandmother telling me that. Shane, a watch pot never boils. So let's go ahead and switch off. Maybe we can find a different trade that's a little bit better. All right, so what do you got right here? Well, we've got a U.S. dollar Japanese yen that really is. It looks to me like we're going to have an opportunity to trade it. The biggest challenge we have, though, we're not in overbought or oversold territory. A lot of action on the yen today, a lot of volatility. You can see for a 5-minute chart, definitely a lot of movement. So if I'm actually interested in making this trade, the first thing I'm going to have is what? I'm either going to have to be in overbought or oversold territory. This looks to me like we're sort of rotating up towards the top of that 70. If we can get above 70, I'd be more than happy to look to sell this thing. And if we can't, well, we're probably not going to do much of anything. So I'm watching this dollar yen closely, though. It's been an active pair today. I'm not necessarily certain, which side I would be on an intraday basis, but I could pull up some long-term anchor points, and we can give you a good read on this market. So be sure to stay tuned to the trading room. After the live stream's over, we're going to get a nice trade idea headed your way, probably within the next hour or so. I'm not necessarily sure what we should hit, though, going into the election. I want to make darn certain that we don't make a mistake, especially with as much action as we're expecting coming our way. Bob, good to see you, Bobby. All right, everybody, this is sort of the deal. This is sort of the emails that I got earlier today. I guess full disclosure, I got a couple accounts. I've got a lot of accounts out there as a trader. Most of you will also have multiple trading accounts. So this is just one that I had, and they sent me this email today, and they said, hey, listen, we're going to adjust our leverage. What does that mean? It means that we're going to raise our margins. We're going to raise our margins. This is all future stuff, but what that basically means, and it's what you guys deal with every single day. I get a lot of questions about spreads jumping around, margins change. The margins are going to go up now. I would be surprised if even, no matter who your broker is, I would be surprised if they didn't raise the margin requirements going into tomorrow's session. Now, the reason why is because you got the election, and really this is the world, the financial world, telling you that anything can happen. They want to protect themselves, and this is AMP Global Clearing. It's one of the bigger outfits in Chicago. They're not too bad for futures. I'm not doing an advertisement for them, though, but definitely check them out if you're interested. But what they're doing with their margins is they're jacking them way up. And the reason why they're jacking them up to maybe 25% is because they don't want to get sided. So if you do take a look at something like this, you'd say, okay, E-mini S&P 500, your day trading, your margins went way up. They went way up. Now, this is a way that I got to watch what I say because everybody's so sensitive these days. But essentially, this is CYA from the brokerages. The brokerages are they're gonna adjust the margins upwards because they want to make sure that you have enough money to cover those positions, because the market is primed for maybe some real historical stuff. And we're waiting on pins and needles. I got my charts open all morning. So have you. We don't know what's going to happen here. And we're going to talk about election projections right now, but we don't know what's going to happen here. And if you don't know what's going to happen, it can be a real challenge to really manage your risk. So this right here is fascinating stuff to me. This is the poly market. I've been referencing this presidential election winner 2024. I've been referencing this a lot. And what you're starting to see is those odds narrow now. Over, I'd say last week, it was pretty much 70-30. Trump was favored to win this thing, and it's changed, and things are changing right now. And a lot of it has to do with some ideas that you're going to have a disputed election. Now, the first thing that I would say to everybody is, number one, keep our heads first and foremost. You're probably not going to know who the president is tomorrow night. You're probably not. And we see a lot of things happening right now that aren't good. And I read this disclaimer earlier today. This is the first time that I saw this, but this is read the rules from Polymarket. Read these rules. This is important right now. Now remember, this is a $2 billion market. There's a lot of money at stake here. There's $2 billion. Okay. Let's check a look at the rules. They just put this up there today because they got a lot of people that are trading this market that want to make money, and that's great. Whatever. If you're a gambler, you're a gambler. I place wagers all the time. I love betting on college football. It's one of my favorite things to do. Okay, but when I see a rule disclosure like this, it means somebody knows something. And when we're talking about a $2 billion market, the folks in that office building, they're getting ready for everything. Here's the rules. The presidential market resolves when the Associated Press, Fox, and NBC all call the election for the same candidate. In the unlikely event that doesn't happen, the market will remain open until the inauguration and resolve to whoever gets inaugurated. What does that mean? It means that we're getting ready for disputed election. That's what it means. These folks right here, they're covering themselves. They need to do that because there's a lot of money at stake. But you also have to say, okay, what does that really mean? It means that we don't think this is going to be smoothly. It goes smoothly. Now I'm going to get back right out to the silver market because I want to put this trade idea out there. This was one that I put out Friday. We wrote a great big piece on silver, and we wanted to really just sort of jam this idea home that we've got a beautiful weekly trend line right here in the silver market. And you've also got a Fibonacci retracement that's right around 50%. This is a big area for silver. Now, the reason why I would start talking about silver right after election chaos is because silver and gold are safe havens. They've been catching bids all year long. They've been catching bids because you're essentially at world war. There's a lot going on in the world. We could go off on a tangent on that, but there's a lot of uncertainty. This election is going to bring a lot of uncertainty, especially over the next 36 hours. This is going to be big. This is going to be a big deal here in the United States. Now, I don't care what side of the aisle you're on. I mean, we're on a certain side of the aisle. A lot of folks are on another side of the aisle. I can tell you that at the grocery store here in Dillon, Montana, a small town, there's heat. There's heat here. And I am shocked. I'm really surprised at how much heat there is in this election. People are, I won't say they're in fight mode, but they're definitely a lot of angst flying around. That's going to be reflected in our markets. Now, one of the things that I would immediately look at is safe havens. So I would be looking at silver to the long side, gold to the long side, and the Swiss franc to the long side. So right here for silver, this is the XAG USD. This is the analytics that I put out last Friday. This zone, we're trading right on that trend line. This area is big. Now, 50% I'm not a fan of, but the trade idea was about 32.50. If you're going to buy 32.50, probably a pretty good spot to go long. We've got a weekly trend line right here. We've got 50%. We're looking to go long here. And the reason why is uncertainty. Typically, that kind of news cycle will help us. Well, if in fact this market does fall away, and I would be very careful, if it does fall away, we're going to go down a lot. We're not just going to break a little bit. This silver market's going to correct itself. You're going to break that weekly trend line, which is formidable. That's a 3-week. We got 3 bottoms there. We're in an uptrend. If we, in fact, wash out the long sides, the retail longs, this market's going to come off big. So I'm watching right here. So the first thing I'm looking at is last week's low. What's last week's low? 32.33. What's today's low? 32.29. We've bounced since then. This is a failed auction. A lot of you guys watched. Did you watch the Beat the Market Maker video that's on our YouTube channel that we made a while back? This is a failed auction type of a situation. So if in fact we do see chaos and some election uncertainty, silver more than likely is going to spike from here. Now, if you don't, if you see an orderly election or if you see a landslide one way or the other and everything's just sort of, there's nothing to contest, this market's going to come off. A lot of people really want to be long silver. I'm one of them, but I'm also not interested in going for a ride. If in fact this thing crashes, I don't want to be anywhere around it. So right now, if you're holding longs, according to last week's trade idea, I think you're right. I don't trade 50%, but when it hits on a perfect trend line, I think that's worth doing. If you do see silver rotate up, we already got a pretty good bounce out of it earlier today, up to 32.87. I'm looking for a little more, though. I'd like to see it trade up to 33 or 34, and I think it can happen. But we just got to be very, very careful with what we do, because this chart, this thing is going to move, and it's either going to go up or down. And I know that sounds like Captain Obvious stuff, but we have that kind of market driver coming our way tomorrow. So we've got to be very careful with anything that we do. You saw the margins, that they raised the margins. It cost an absolute fortune to be trading silver longs. Whew. Especially in futures markets. I mean, we would need a couple $100,000 to make those trades. But on the OTC markets, say you're with Switch or somebody that gives you that opportunity to really use a lot of leverage and trade some of those spot pairs. You got a much larger leg up than me. I would have to trade micro silver or silver futures there. Silver futures full size they're horribly expensive, but the micros, I might look at the micros later today, but it's got to be worth it. It's got to be worth doing, or else there's no point. Gold, we might as well just hit on gold as well. Here's gold, spike low, spike high. I like to keep things very simple. The uptrend, valid, no question about it. So if the uptrend's valid, the trend is your friend till the bend at the end. You want to be long, you don't want to be short. Now, can this market correct? 100%. If things go smoothly tomorrow with the election, you could get a big correction here. I still would much rather be long, spend my money to the long side rather than to spend it to the short side. So something like this right in here, that type of level, 27.18, that's a pretty good one. That's a pretty good one. Let me see. We got a question here. Wizard Alvin, would it help to be referring back to prior elections to reference any whips? Wizard, you're 100% right. Okay, I'm a firm believer that history repeats itself. Markets have memories. People have memories. People treat money roughly in the same fashion. Doesn't really matter when. We always see bubbles and crashes. That's the tendency with money and the way the traders work. I was there 2016 when nobody thought Trump was going to win. Nobody thought Trump was going to win. They already had Time Magazine, Madam President. The fireworks were already scheduled. The Democrats, Clinton, already thought that it was over. And we started to understand the day before, right about today, right about next 4 or 5 hours, we saw some signs coming out of the Clinton camp that it wasn't over. They canceled their fireworks show in New York City. So what I'm saying is how'd the market respond to that? It crashed. As soon as we injected that uncertainty, holy cow, Trump could win this thing. Even the S&P 500 just absolutely cratered during the overnight after the election, after the vote tally was basically in. And the truth was, Trump won by a lot of votes in that election. It was to the point where they wouldn't contest it. Clinton actually conceded, which we're not going to see tomorrow. Neither side's going to concede. So you want to study history, I'm in. Let's do it. But what I would say is be ready with your technicals. You want your technicals. You want to make sure that you have a good technical approach, and you're not going to be sort of like, okay, well, this side's going to win, that side's going to win, so I'm going to do this. Now, we're going to put a video out tomorrow that's got Connor's going to go through what he's looking for in the markets, and I'm going to go through what I'm looking for. And check it out. It'll be on our How to Trade channel, posted probably midday my time. But the biggest thing we have to remember is it's going to be crazy. And so when you're looking at historical tendencies, you're 100% right, Wizard. But I think that you could see anything. You could see a crash in gold. You could see a rally in gold. Unrest, challenged elections, that's going to make gold turn higher. Something decisive, maybe a landslide in either direction will make gold come out. Remember, a lot of that uncertainty is already baked into the cake here. A lot of it's priced into this gold market. There's absolutely no question about gold trading at all-time highs. We're there. We're up to 2,800. Most of us believe we're going to 3,000. We think it's going to happen before New Year's. I'm a firm believer of that. And I can tell you that if there is unrest, terror attacks, polling issues, contested elections, government move, unprecedented stuff, gold goes to 3,000, and it happens fast. Right now, though, I don't think we're there. I would much rather be holding longs here than shorts. I think that's what you're probably going to be looking at. But look how tight that market is today. Nobody knows what to do. You start seeing dojis show up on your chart, nobody knows what to do. All right, let's get back to our 25. See, got a little bit of action here. Not too bad. There was our buy, so we bought right up in here after we were in oversold territory. There's our crossover. We went long. Okay, what's happened now with our crossover strategy? Did we cross over again? Can't really tell. Looks like it. It's behind the bars, though. We can adjust that. But what I would recommend, though, is a lot of folks really love getting in and out of these strategies. Hey, crossover, I'm in, and then crossover, I'm out. This is a prima facie example of why maybe using market structure, maybe reading market state and understanding what's going on with price is going to give you a legitimate chance to win, as opposed to maybe just always dodging in and out of trades because the crossovers happen frequently. This isn't a bad trade, guys. I mean, we took some heat. There's no question about it. We took some heat right there, but it looks to me like we're going to get this thing home. We'll see if we hit this market structure up here on the 5-minute. I believe it'll be successful, though. I'd be surprised if it isn't. All right, one other one that I wanted to trade today, and then we're going to talk about a little bit of crude oil because it's very important. Of course, the dollar-yen here on the 5-minute chart, we just don't have an opportunity in here yet. We don't have that crossover, and we also aren't in overbought territory. So as much as I would like to probably sell it and take an intraday scalp, you're welcome, Wizard. I hope that helps. What you want to do here is you want to get a market that's moving, and that's why we're focusing on this dollar-yen. We definitely could have an opportunity, but we just aren't into that overbought territory just yet. So we're going to wait. We're going to let that one fizzle, maybe get in later today potentially. But one that I want to look at, and you'll notice that you've got a pretty good mover on your hands here, is the dollar Swissy. Now, there is a reason why we're down big today. 5-minute chart, yeah. Friday, okay. Then Sunday opens. The sell-off continues. Safe haven. Swissy's a safe haven. So you're seeing a lot of money really go into the Swiss franc right now. And we're starting to see a little bit of a rebound. Personally, I would much rather sell the Swissy right now than buy it. The reason why is I want to back the Swiss franc against the dollar, not the other way around. So if, in fact, we're going to make this trade on, say, a 5-minute chart, we've got to get overbought or oversold, and we're just not there on the RSI. Let's go ahead and back off, though. Let's take a look at sort of a macro picture here. 30-minute chart. Okay, this is pretty good stuff here. Okay, we have an opportunity right there. We were in oversold territory. What are we going to do if we're oversold? We're going to look to buy the market, and if we're going to buy the market, we've got to get a crossover. 30-minute chart. This isn't bad. I would much rather sell this thing, But if in fact we get an opportunity here, potentially to buy a crossover, you could do it. You could do it. You just got to make sure that you dial your risk in. In this instance, if you do have the 9 cross the 20, something like that, I would execute exactly like we just executed on that S&P 500. I would be beneath the previous swing low, somewhere down in there, 86.13, somewhere down in there would be my stop loss, and you'd be buying probably 86.50s. That would be my guess. I don't know. I don't know how high the market's going to go, but you're probably going to be buying 86.40s, 50s, somewhere in there. And is that a good position? Well, I mean, I don't particularly like it. I would much rather take a position short. I definitely would rather take a position short, but according to this 920 crossover strategy with RSI, it's set up for a buy right now. It's not set up for a sell. So that's sort of where we're at right there. All right, guys, we got some other stuff we got to talk about because it's important. I've already talked about how this election is going to be contested, and I really want to keep my own political views out of it because it's not important. It's just not important. We're traders. We're looking at the market. We need to know what the market's going to do. Okay. We're already setting up to have a contested election. And you'll notice the state media, CNN and New York Times and all this stuff, they're really just priming the pump and getting everybody ready for a long, drawn-out fight over who's going to win this thing. Now, it's not unprecedented. There's been disputed elections before. The last one, in 2020 was disputed, but it really, it wasn't, how do I say this? It was disputed, but it also took forever to count the ballots because it was a mail-in type of a situation with COVID. So you look at 2020, and it really was unprecedented. We had a global pandemic, and the voting really was messed up. I mean, the mechanism was completely different. There was a lot of accusations of fraud. There was a lot of things that were proven. There was a lot of things that weren't proven. At the end of the day, there was a transfer of power. They did swear in Biden, and Trump did leave. Now, this is going to be a different situation here in the United States. If, in fact, this thing's close, they're going to be counting votes for weeks. This is one issue that people are talking about right now. No one can believe that it's happened. Right there, military ballots. Overseas military members, active duty, they didn't get their ballots. This right here has the ability to derail the U.S. elections for months. It really does, because nobody's gonna let this stand. This will be an immediate challenge in the courtrooms, and this is one that probably will get picked up by the Supreme Court. So what I'm trying to say is there's a lot of things going on here. There's a lot of things going on here that really point towards having an election that's not going to be over relatively quickly. There's going to be a lot going on. So if we're going to trade this thing, how do we trade it? Number one, we're getting ready for anything. It always pays to be ready for anything. If this election's contested, and if it does not develop, if there's no verdict by the end of the week, remember last one was messy, but you still had a declared winner about 3 or 4 days later. I don't know that you have that this time. Now, if the longer that it goes, the crazier things are going to get. The crazier things are going to get crazy. Now, I've sort of already told you what I thought about metals. I want to be long gold. I want to be long silver. There's no question about that in my mind. Crude oil is sort of a different story. Now, if we see a bunch of unrest, do we want to be bullish or bearish crude oil? Probably neither. It's going to flatline. This is the level that I want everybody to understand is the most important level in crude oil, 64.50. This is a U.S. oil CFD. Once again, we talked about this last week. You say, Shane, why is your one level? Why is 100% down there at negative 40? Because that's what crude oil cost in post-COVID here in the United States. It was negative $40 a barrel. Nobody's ever seen anything like it. We don't think we'll ever see anything like it again. But that's the bottom of this market. That's the low. Most technicians, and I've watched a lot of them on YouTube, and I've watched them make horrible mistakes because you're sitting there saying, okay, the low there was 0 or 1 cent. No, it wasn't. Crude oil was negative. Okay, crude oil, you go from that spike low, that massive plunge that really took fortunes away, and some folks made hundreds of millions of dollars on that trade getting short. But right here, there's your rally. That was your Russia-Ukraine. That's the range that we need to be thinking about. Now, it's very important because you can see markets have memories, and right down there, those are your demand zones. You can see that we've tested 64.50 repeatedly. If Trump wins, this market falls away in a big fashion. It's going to be part of the video we put out tomorrow. There's no question about it. Drill, baby, drill. They're going to flood the markets with oil, and the idea being that energy price, that energy reduction will cut inflation. That's what Trump's going to do. Now, On the other side, if Harris wins, what can we say about crude oil? It's probably going up. The reason why is you're not going to reinstate the pipelines. The Keystone Pipeline is going to remain in mothballs. You're also probably not going to expand the leases, the drilling leases, the fracking leases. You're probably not going to see that either. So if there is no, expansion of the amount of U.S. oil going to market, you're probably going to see those prices creep up. And then you start talking about some of the more extreme things like Plan 2030, where half of the vehicles sold in the United States have to be electric by 2030. A lot of those things are really going to put the pressure on the crude oil market. It's very simple, guys. If Harris wins, you're bullish crude oil. If Trump wins, you're bearish. The key market, the key level in this zone, 64.52. 64.50 is absolutely huge. So relatively straightforward, guys. We're going to go ahead and buy metals. Commodities are going to be mixed. If Trump wins, you'll see crude oil come off. If Harris wins, you're going to see probably a significant rally. I would expect $80 crude going into Christmas, and I would also expect potentially 2025 to be an incredible bull year for WTI crude oil. That's what I would say. So it's going to be tough to gas the truck up in one respect, or maybe go buy another truck in the other respect. It's just what it is. All right, everybody, I want to thank you for joining me today. This is an exciting time to be in the markets. I can't really think of anything really better to be doing or anything else I would rather be doing than watching this whole thing unfold. I think that there's going to be tremendous volatility. So, if you're in the markets and you're taking a side one way or the other, just remember there's a potential for incredible victories here and incredible wins and incredible profitability, but you could also take it on the chin in a big, big way if you get on the wrong side of these markets. T. Marina Tucker, Encyclopedia Shane. No, I've just been around for a while, Marina. I've just been around for a while, that's all. All right, guys. Okay, we got one other question. Let's see. JC, good to see you, Jay. What would you expect the Forex to do if Trump wins? That's fascinating stuff. I don't think that it's going to matter who wins. That's sort of a cop-out. But I think the Forex, I think the future of the dollar is not good. I think that you're going to see a major transition away from the U.S. dollar in the coming years. We've already seen the BRICS nations lay the groundwork for that centralized BRICS currency. They've already got the app. You're going to be able to pay with a BRICS currency, and that currency is going to be backed by 40% gold, supposedly. So that in itself is going to be the major market, really the major force working either for or against the dollar. And I don't think either administration it's going to matter. I would expect rate cuts after last week's brutal jobs number. And we had all the coverage. I don't think there's any question about if we're going into a recession. I think that's done. I think we settled that last week. We understand the books are cooked. The jobs numbers are cooked. We're going to see us gravitate towards an economic contraction. Now, the way that will be fought by the Federal Reserve is they're going to cut rates. So I see the dollar right now. It's right around 104. That's strong. I see the dollar down in the mid 90s. Don't care who's president next year. I think that's going to happen regardless. And the idea is going to be, hey, we got to be able to stave off a recession. And the other thing I would say is your T-bill yields. All of a sudden your bond yields are up and your interest rates on your 30-year mortgages are up. And that's after the Fed has already cut rates by a half and they're already told you they're going to keep cutting. Those lenders, those yields should be coming down and they're not. So that really tells us that somebody knows something. I think the U.S. dollar loses no matter who's president. Remember, the presidents, they don't really impact your monetary policy, but what they do is spending. And I think whoever you put in there, Trump or Harris, they're both going to spend. Trump spent a fortune when he was in there, and in the last 4 years from the Biden administration, they spent even more. Now, a lot of that had to do with COVID. The COVID stimulus programs, nobody even knows where half of that money is. It's in the system somewhere. But this big stuff, it's a great question, JC. I would be playing the dovish side of the dollar in the coming 6 to 8 months, 9 months. I'm also sort of on the short side of the stock markets. I don't officially have a futures position open yet or an options position, but I don't really see any way around a correction, at least to 10%. Now, we could argue that all day long and say, well, Shane, we cut rates, we can keep it going. So Trump's going to say if he wins, it's great for the markets, and I don't necessarily believe that's going to be the case. We have a tremendous amount of debt, and you've got a dollar that's just not stable yet. It just isn't. So we got to wait and see how those things pan out. And believe it or not, that's going to really fall outside of the realm of whoever's president. They're not going to be much they can do about it. So the other thing's bank failures. We'll talk about those tomorrow. All right, everybody. Thanks for joining me today. I know I sort of rambled on there at the end, but it's a great question. It's a great time to be in the markets. If you have any other questions, pop by the trading room, how to trade, send me a message. I'll be sure to get back to you today. We'll have a trade idea coming out here probably in the next hour or so. I just got to pick the dog with the least amount of fleas. I'm just kidding. There's some great opportunities there, but everybody needs to be careful. Caution's the better part of valor. Caution's the better part of valor. Remember, every dollar you lose, you have to make it back. Don't lose tomorrow. Don't lose. I don't care if you go home with a zero account. Don't lose. All right, guys. Let's get after it. It's going to be a lot of fun. We'll be back tomorrow. Full election day coverage. I'll sort of tell you what I saw when I went to the polls first thing in the morning. And we'll be watching the news. We'll be watching exit polling. Probably going to be a few streams tomorrow, so just sort of be heads up. And if you miss one, they're always on demand. All right, Mark, Bobby, Bob, good to see you guys. Thanks for joining me. Trade the action well, and we'll talk soon. See you.